Welcome back. You're watching BizCheck, and of course we are live from Broadcasting House, where wholesome conversations around money, business, and of course economy takes place. This morning, of course, we've been discussing issues around cryptocurrency, how to go around the murky waters of investing in cryptocurrencies, and of course you have heard it all from the gentleman. Time now to shift gears and of course discuss now the real estate industry. Did you ever know that Buruburu Estate here in Nairobi was one of the earliest investment in mixed-use development? Yeah, and I'm talking about how many years? Almost 50 years ago. Well, the concept is now gaining pace, with multiple investors angling for a piece of the pie. And there are many developments that are taking place, not just here in Nairobi, but in many parts of this country, from Mombasa to Kiambu. There are so many MUDs that are currently under construction. Helping us with this conversation is Mumo Kianga. He's a development manager at Vida Homes, which is one of the developers of Garden Estate. Thank you very much indeed, Mumo, for finding time to be with us here.
Thank you, O'Brien, for having me.
Help us understand, first of all, what is a mixed-use development concept?
Yeah, it's a good question. So a mixed-use development scheme is essentially where you have multiple uses on anything from an acre to 20, 30, 40, 100 acres. But what I mean by multiple uses is you may have a commercial component, so offices and retail. At the same time, you might also have apartments and townhouses and residential, all within a gated sort of estate with controlled access and security and all these things. And so there are multiple benefits of such a scheme, as you can imagine. Yeah.
I've seen a situation whereby people would say that if you have an apartment and then you have a shop, you have a butchery, you have a hotel, that would still be classified as a mixed-use development. Is that the case?
Yes and no. I think it's important to understand in terms of institutional mixed-use schemes, there's a difference between what you'll find in different areas where you quite rightly you'll have a big residential complex, but to support the residents within that complex, they will put a butchery, a small commercial shop. That wouldn't be called a mixed-use scheme. That is generally a residential development with supporting uses for the tenants and residents within that scheme. Yeah.
So what classifies a development to be called an MUD?
I think it's in the scale of the development and the intention by the developer. So at Garden City, for example, it was quite clear in the beginning that we wanted to develop a mall. And also with that develop apartments and townhouses, and then with that develop an office component as well. And all these three, at the scale they're in, we built maybe 20,000 square meters of grade A offices, which are currently leasing. The mall is around 35,000 square meters of retail space, and the apartments and townhouses around 215 of them in total. So that scale would classify Garden City as a mixed-use development. Yeah.
And these days, I mean, you have so many of them, from Garden City to Tattoo City to the Gara housing scheme, whereby you have tenants, you have shops, you have walkways and all this. There's so much. Why is this concept now becoming so popular?
I think the simple answer, convenience. It's all about convenience. And the idea is for a developer who is looking at the end user, whether it's the person coming to the office or the person coming to use the mall or the person living in the apartments, to create an environment that sustains a lot of convenience for the people who will be using the space. So for example, at Garden City, if you're living there, you can very quickly drop by the mall and do your shopping. If you're also working there, you can imagine within a very short amount of time, you're doing so many things that are generally not requiring you to get into a car and drive around, and issues of traffic and all of this. So it's that convenience that's driving it, and we're seeing a lot of end users and buyers and offices and retail retailers looking to that convenience as a key thing for them. So we're trying to answer that that demand. And then if you also take a step back and you look at Nairobi generally, and you look at some of the issues that are keeping you from enjoying that kind of convenience, traffic, pollution, all these things, you can see why the end user has that kind of mindset towards mixed-use schemes. Yeah.
And are you convinced that the market is ripe for the kind of investment skills that we are seeing in MUDs? Because there are so many, and they're scattered all over the country.
That's true.
From Mombasa, Nairobi, Kisumu, they're all over the place. And the question is, is the uptake as good as the number of development projects that are currently underway?
So I'd say one thing. I think when we look at one of the main users within mixed-use schemes, retail, for example, where the malls, for example, I think the size of that is steadily going to reduce. You're not going to have very many Garden City or Two River malls or the hub Karens. Like, that's not going to be something that can be sustained within Nairobi. But in different localities, Mombasa, where you haven't had that level of investment, for sure that demand is still there. At the end of it, it's all about creating business and giving people opportunities to show off their wares, right, within the mall. And I think that demand is always going to be there. So that the only difference probably is that the scale of the malls is going to reduce over time. And I think we're already seeing that. And there's also now what you're seeing a lot of in these neighborhoods, within Nairobi, where you have convenience retail centers coming up within residential estates and neighborhoods. There's a lot of that going on, and so you have to look at that as something that's telling you, the market is telling you, that generally, convenience is still important, because the reason the convenience store in these areas is the demand is there is because people can, on their way home, pass by, pick up some milk and bread, and then or do some other shopping, go to the salon and all these other things on their way home or on their way to work. So that level of convenience is always going to be something people want. And I think decentralizing retail from these big centers is in the future going to be something you see a lot of.
Yeah, it's true that we have gotten to a saturation levels in terms of the number of malls that you have here in Nairobi, for example. And but in a mixed-use development concept, a retail center is supposed to be like the magnet. It's supposed to be like the anchor project. So if we have gotten to a point whereby we have reached the saturation levels for malls, so what is going to attract residents in an MUD?
So the attraction is always going to be just business. Within a mall, it's going to be business. At Garden City, our footfall numbers have been very steady and very high over the past, since it was launched. And you'll find a lot of businesses want to take advantage of those footfall numbers, right? We've had a tumultuous time in the retail industry, with Nakumatt and all these other issues, ShopRite, for example. However, I think generally the ability to attract people to these centers is what's going to sustain people and other retailers wanting to be in those centers. And I think that's going to continue over time. The benefit of a mixed-use scheme, especially if you've got large trunks of land, is that you can then build supporting infrastructure and uses that will support that retail center and support each other, really. So, our first project as Vida Homes is at Garden City. And the benefit of that is we're bringing maybe 600 units to the market, and that's going to be 700, 800 tenants and residents who will then be able to benefit from the mall and benefit from the offices that we'll be building. In the future, we look to bringing in a hospital as well, and data centers and a hotel. So the opportunities to create synergies with large tracts of land in well-located areas by having different uses is quite high.
And you operate within a radius of less than 20 kilometers from one of the largest shopping malls in Africa, in the name of Two Rivers. And I mean, let's face it, the malling culture, has gone through a serious challenge, especially with COVID-19. And we have seen a number of, tenants, opting to vacate because of falling customer numbers.
Exactly.
Do you think Nairobi still has more space for new players in the market?
I would say the answer is yes and no, and I'll qualify it. So yes, there's space for more players in the retail center, and residential development, always going to be a lot of demand. But I would say that the demand or the focus going forward is, in my view, not going to be large malls, because already, if you look at it geographically, the spread of large malls is already sort of cornered Nairobians, right? So you've got Two Rivers, you've got Garden City, you've got in Karen, there's a lot of malls that have come up there. You've got, within the spread of that, you've got Kilimani and Kileleshwa that already has so many malls. So I'd say the focus going forward is going to be convenience retail. The impact of COVID has been unprecedented, I'll be honest. Generally, it's affected businesses and people within malls that are sort of what we would have called grade A malls, such as Garden City, Two Rivers, the Hub. I think a lot of businesses have seen generally people's spending power has reduced because of COVID, but it doesn't mean that Kenyans are not resilient. And over time we're seeing, and it's starting even now, the footfall numbers start picking up again. Businesses start, sort of getting a higher turnover. So there's always going to be market shocks. The key is to have a development that can sustain those, to be well located. And I think Garden City, Two Rivers, and all of these other malls are at that position generally.
Mm-hmm. Let's, for example, look at Garden City. At the height of COVID-19, I mean, whereby the cessation of movement was in place, and interactions were highly discouraged. Your more foot traffic dropped by what margin?
I'd say 20%.
20%?
20%, 30%, yeah, generally. But there's a lot of other factors that were happening. We lost ShopRite, right?
Yeah.
And before that, we lost Nakumatt. But now we've got a very stable tenant as in Carrefour. So the bringing on board Carrefour has also given a lot of people within the neighborhood a lot of confidence and reason to visit the mall, and we're seeing that sort of picking up. COVID protocols and generally in Kenya, people understand that COVID has been there. And but it's something that for the next foreseeable future we're going to have to still live with.
Did you lose clients?
We did.
Because of COVID?
We've lost
How
clients.
many?
People have pulled out of the retail center, but at the same time others have come in. Mm-hmm. So there's a lot of that sort of give and take within the mall. So on a net, we've actually retained the clients in terms of number of clients, even though there were people who pulled out. Mm-hmm. Yeah.
What is your current occupation rate?
I'd say we're at 85%.
85%. For how long have you been at 85%?
I think pre-COVID we were punching at 90%, but now with COVID, 85%, and we're seeing that number start picking up.
Starting to pick it up.
Oh, for sure. So and interest and demand is also growing.
Mm-hmm. Yeah. So you have new player or new tenants in the pipeline.
Yeah, for sure.
And what about in your residential apartments?
So the existing, there's two different residential developments at Garden City. We have the higher income GC residences, we call them, where we had townhouses and apartments. And funny enough, we are now probably 90% leased on our townhouses development, and that has been through COVID. The leasing and uptake has been very high. The apartments as well has sustained sort of their occupancy levels. We haven't seen a dramatic shift. A lot of that is because of, and we're grateful for this, the businesses that are around Babadogo, the industries and all of these things are, businesses that can, the senior management are finding Garden City a very convenient place to live. But now we're also developing a middle-income product at Vida Homes within the Garden City estate. An uptake of that in terms of sales has been through COVID last year. I think March to September was tough, right? As it was for, I think, every other business and every other developer. Mm-hmm. But those numbers have started picking up now. I think we've had the best month this month of September in terms of sales this year and last year combined. So it's looking very, very good going forward. I think it points again to the resilience, and it's something that as a developer we're grateful for, to be honest.
And when you look at even the impact of COVID-19, and one of the areas that have been hardest hit is the purchasing power, among Kenyans. People have lost jobs, and the people have gone through pay cuts. Companies have downsized and reorganized their workforce. Have you also been forced to review the cost of your units?
So yes and no, right? And I'll qualify that again. So for the Vida product, the unit pricing hasn't dramatically been revised. And that's because people have still been coming, especially this past couple of months. And we've seen people still buy the units at the listed price. And, there are people who, because of COVID, who bought initially before COVID, have had, issues with their financial cash flow. So they weren't able to keep up with the payments. And we said to them, look, we understand, right? We understand that this is an unprecedented time. You've been impacted by this. You didn't plan for it. What we can do for you is extend your payment terms, right? So even though the pricing hasn't dramatically shifted, what we've done is been flexible with our payment terms to allow buyers more time to recover from the shock of COVID. And, the payment terms now are even extending beyond completion of the project. So, it's something that we are trying very hard to be flexible about, because we understand. Mm-hmm. Yeah, we understand.
And of course, in terms of investment, I mean, look, Garden City is a major investment. You're talking about 7-point-something billion shillings invested so far, with almost 3 other billion shillings, to be invested. And so you're talking about a total investment portfolio of about 10.5 billion shillings. How has COVID impacted your anchor investor in the name of Actis in helping in the rollout of more projects?
It's a very good question, Brian. So the good thing with our shareholders, Actis, and for Vida, we have another shareholder called Shapoorji Pallonji. They're based out of India. Actis is a private equity fund based out of the UK. And they have multiple investments, not just in real estate, in energy and infrastructure across the world. So they are they're set up to withstand shocks like these, right? I think real estate is probably their smallest portfolio, right? But we're talking about $500 million of committed capital, for their real estate fund. Energy and infrastructure is in the billions. So they are, let's say, very liquid, but also very smart in how they deploy their capital. So, for example, the reason why, even through COVID, we've still been able to continue with construction at Garden City with Vida is because of that sort of liquidity that they bring to the table, but also because they've invested in a team that's able to sort of manage these issues that come with COVID. Mm-hmm. Yeah.
And in terms of completion and handover of project to investors, how has it been impacted by COVID?
So again, with Vida, there's been no impact. We stopped for 2 months construction, and that was just so that we could understand how better to protect the people who are working on the site, right? Because that still had to keep going. And
of course, 2 months at a construction site, it's
a serious time. It's a serious delay. Exactly. But we've seen worse, and I think the reasons for it were
What was the worst you've ever seen?
Well, projects have been delayed for 2 years, 3 years, for multiple reasons. Mm-hmm. I think COVID is a good reason to slow down construction, even if it's by 2 months. Mm-hmm. I think it's a good reason, especially if you're doing it to protect the workers, right? To find ways to protect them, because they're going to be working side by side. The last thing you want is for COVID to start spreading within sort of your construction site. And I must say that the National Construction Agency, their protocols have been spot on. We've used them, and we've kept that standard throughout. Mm-hmm. Exactly. Sorry, Brian. I just wanted to say that despite the 2 month delay, we've pushed very hard to catch up in timelines as well. Yeah.
And of course, I mean, one of the worst nightmares of a developer is delays, because it leads to, cost overruns. How has the case been for you?
So it's been, like you've said, there's always that impact of cost overruns, and there's always that opportunity for it to become something that is unsustainable, because also you can't really start passing those cost overruns to your buyers, right? So we've, through the team, through our finance team and our accounts team, managed to, and our projects team managed to ensure that through cash flow management, we are not actually spending more than we are able to. So that's been a good thing that we've been able to manage within the team. Exactly.
But by what margin has your investment been impacted by the delays?
So the delays usually is an impact on what we call preliminaries within a construction sort of contract. And prelims are basically what the contractor needs to keep the project running through the months. And with those 2 months, I think the impact has been maybe 10 million, 15 million shillings. Which is the price of a 3-bed unit, and that's something that we've had to absorb. But at the same time, we've found other ways to make savings without impacting the quality of the project or the safety of the project. Yeah.
And of course, if there is a segment of the market that has been hardest hit by COVID-19 is the middle income class, because they are always in a very precarious financial situation. I mean, they are one step away from being classified as wealthy, and they're one step away from being classified as poor. I mean, that's a tragedy of middle class here in Kenya. So how then are you saying that you haven't seen a knock-off impact in terms of sales?
No, we have. So before COVID, we launched our sales at Vida in August 2019. And between that time and March last year, we were selling in double digits every month, right? So 15 units a month. And it was great. We were, it was fantastic. The reception was great. Exactly. And then obviously COVID hits, and those numbers drop down to single digits numbers, right? And those single digit numbers are still what we are seeing, except it's getting higher now, right? So we were impacted by that. And I think what we have resisted is the temptation to drop prices because, we still believe in the product we are offering. And because of the success story at the initial launch, that has given us a lot more confidence. And even at these prices, buyers are still coming in. So there's a way to balance sort of these types of shocks. We are fortunate in our ability to weather the storm, right? Because of Actis and Shapoji Palonji. And we're still able to cash flow construction using their equity. And that's been something that's been, a great boost for us. And I think a lot of buyers have seen that and have seen their confidence grow in us. And because of that, they have come and put their money with us. And that's something that I think, on balance, is helping us sort of navigate these murky waters of COVID.
In your opinion, I mean, is there anything that you believe the government can do to help offset this kind of a problem?
I tend to lean more on what private sector can do, and I think what the government initially did with sort of with the interventions with the banks, and I think there was also there's some shock absorbers they gave to clients who had taken loans through the CBK and things like those. So I think it was great that they did that. For us, within the construction industry, I don't know if there's anything the government can do to support developers, private developers, financially. But for sure, I think one of the key ways is to keep approving projects in a timely manner, new projects in a timely manner. We've seen a lot of infrastructure development that's now at a macro level. Roads being built that are connecting now parts of the city that weren't previously accessible. That's great, that assists us in the long term. But if you've launched a project and you get hit by COVID, it's very difficult to then turn to the government and say, Serikali's idea. It's very difficult. It's very difficult.
And I mean, look, when you look at your target market, you're looking at, the middle to higher income groups. But we're also seeing a lot of shift, in terms of refocusing the markets, to the lower income group. How comes you have not been tempted or been bitten by that bug?
We've been tempted, we've been bitten hard. And I think one of the things you'll see from Vida Homes going forward is a focus on that group in terms of unit prices and the product type.
And you're talking about a unit price of how much?
Below 5 million shillings. Below 5 million shillings. And what we're trying to figure out now, and it's a huge...
that is for a 3-bedroom or for
a 2-bedroom unit. I think for a 3-bedroom you'll be punching at 7 or 9 million shillings. In fact, our second phase at Garden City is going to be around those prices. So, we have to also just be aware of what the market is telling us, right? The market is telling us quite clearly, look, at this level, there is a lot more demand because there hasn't been a lot of supply, right? And, we are saying, well, why don't we try and figure out how we can tap into that demand and give people quality units at good prices.
And so, I mean, how do you mix the two in one environment? On one hand, you have investment for high-end clients, and then next door you have investment for low-end clients. How do you mix the two? I mean, without offending the other group.
No, look, I think generally the chances of offending people are very low. Kenyans enjoy community. And I think part of
but people must keep lanes.
Yeah, they must keep lanes. But we don't have that ideology. We don't, and we say, look. So insofar as you can afford to be at Garden City and to purchase a unit with Vida, then you're welcome to stay. You're welcome to stay with us. And even if the prices, we've got townhouses that are now costing 26 million shillings, just next door. Right, to a 3-bedroom apartment that's selling for 16 million shillings and a 2-bed that's selling at 12 million shillings. So that kind of relationship, there's nothing wrong with that. Kenyans don't have, I think, and from what we've seen, they don't have that kind of classification in terms of community. They're very happy to live with each other as long as you're not sharing amenities and things like those where you're sort of the livability aspect is compromised.
And one would also say that when you're quoting a 2-bedroom unit, at 4 million shillings, that would be classified still on the higher end. Are you looking at a situation whereby you're likely to come up with a similar development whereby somebody who has 3 point something, 2 point something would be able to get a unit?
So that market is difficult to crack. I'll be very honest with you, O'Brien. It's very difficult to crack because the cost of construction is still high. You're still paying the same amount for cement and for steel, right? And unfortunately, the land valuations in Nairobi generally have just been on the up and up. So that's been a challenge for us. In the future, yes, we'll be looking at playing in that market, but you'll find that it'll be, within the environs of Nairobi. So Kiambu County, Machakos County, Kajiado, where the land prices are still low enough for us to go into and still offer that kind of price for a unit.
When you look at the market for high-end units in Nairobi and mid-range market, do you believe there's still room for more?
I think there's been a shift. I think where there's room for a lot of scale and a lot of development is in your lower middle. And I think that's been an untapped and unsupplied market. When you start going higher and higher, there's been a lot of supply in those sort of different segments in residential. And, we're seeing that unless you've got a very compelling development that offers something that you can't find elsewhere, then you're going to struggle with sales. But at the lower level, the sales there are very high, very high. Yeah. And we've seen that with different developers that we are in touch with, and we know because the industry is very small. So yeah, we're seeing a lot of that, and it's primarily driven by investors, and it's young investors, 25 to 40, who are looking at those units and seeing a very an opportunity to invest in an asset that holds value, right? And real estate does that. It holds value and increases over time. So that's what we are seeing from the market here.
And of course, now we are seeing development shifting out of Nairobi, to the fringe counties of Kiambu, of Machakos, of Kajiado, Murang'a, and so much. Where would you bet is the next biggest development destination in this country?
That's interesting. It's a good question. I think I would say, and it's something we're monitoring quite closely, generally developments will go where infrastructure goes. So where you've seen the expressway, and Kiambu County is not far, right, in terms of its borders with Nairobi, and neither is Machakos. Machakos borders is in just at the airport, so you're not talking being very far from Nairobi, and the same for Kiambu. But where you have large infrastructure developments that increase people's ability to get to where your development is, that's where you're going to see the shift. And at the moment, it's Kiambu County. There's a lot of investment there. It's Machakos County. There's a lot of investment there with the expressway, and I think that's where you're going to see in the future a lot of developments coming up, residential and malls and etc.
What, now that you're talking about, the Nairobi Expressway, what do you think will be the impact of the expressway on the local property market?
If you look at it from a theoretical standpoint, generally where you have investments in infrastructure, roads, and that shift mass public from corners of a city, generally the spread follows that investment. And what I mean by that is land values will spread out, right? Because there's now more access to cheaper land in different areas because of that investment, and following that will be developments, and people wanting to live farther away from the city for all the reasons we know: pollution, congestion, concrete jungle, everything that we see now within the CBD of Nairobi. So there'll be a good reason for demand to shift. There'll be a good reason for supply to also shift. And it's something we commend the government for as developers, because this investment has been long overdue and we're glad it's happening.
In the interest of time, because we have to come to an end, the government is also expected to start the construction of the Mau Summit expressway that is going to ease communication or travel time between Nairobi and the counties of Nakuru. Are you seeing a situation whereby a lot of investment is also likely to shift from the so-called the star counties of Kajiado, Nairobi, Kiambu, and Machakos to Nakuru County?
Maybe for that kind of development that's going into these other far-reaching, well, not far, but these counties that are big distance from Nairobi, what you might find is an easier transportation of goods. So agriculture, industry, manufacturing. So that might be the shift towards those areas going forward with these sorts of investments.
You don't foresee a situation whereby somebody is likely to live in Nakuru and work in Mombasa, in Nairobi, or live in Nairobi and work in Nakuru once the highway is complete?
It's very possible. It's very possible. It's very possible. I think you'll find there is a market that will want to do that. But I think majority, because between Nairobi and Nakuru, there's a lot of land that will be opened up. And, if you have a development closer to Nairobi than to Nakuru, more than likely you're going to get a lot of demand for that over time than a development in Nakuru, for example, if it's residential, just to keep it. So that's probably how it will play out. But logistics in these different areas where transportation of goods can happen quicker because the roads have been upgraded, for sure.
For sure. As Vida, once you're done with Nairobi, where do you plan to go from here?
It's a good question. We initially have a plan of going towards the different counties. Mombasa is one of them, Nanyuki, Eldoret, and there's a lot of research that will inform where we actually go. And depending on our success levels, and we're hoping that we are successful in these different counties, we will also look to go and spread our wings outside of Kenya, because the housing gap generally in Africa is still very high and supply is still very low. So those are the opportunities that are there for Vida, and it's something that we want to sort of tap into. But first, Nairobi's heart is where the home is, where the heart is, and that's where we are, and that's what we are trying to capture. Yeah.
Finally, where do you see development of mixed use in Kenya going in the next 5 years?
Well, it's going to be a very interesting time, O'Brien, and we look forward to see how it changes. But in my mind, I think the scale of mixed use developments are going to shrink, are going to become smaller and smaller, and because the market is basically saying that. And I think developers who are looking at the market now will be trying to capture that as well.
Very good.
Yeah.
Thank you, Mumo, for finding time to be with us, of course.
Thank you very much,
and of course, helping us understand where the dynamics in this industry are headed.
Anytime.
Very good.
Asante.
And of course, we have been talking about the concept of mixed-use development with Mr. Mumo. He is the development manager at Vida Homes. They are the developers of Garden City here in Nairobi, and of course, giving us his perspective on where this market is going. Well, it's now past noon. Thank you very much indeed. You have been with us here since 10 in the morning. My name is O'Brien Kimani. This has been Biz Check. Gladys is coming up next with Kurunzi. Stay right here. Otherwise, from me and the rest of Biz Check team, have a good afternoon.